over 50% of short-term vacation rentals have been purchased in the last 2 years in the US, which is kind of an alarming number.
Wow. Anyone seen a huge decrease in bookings over the last 3 to 4 months? We went from at least 50% occupancy to literally 0% the last 2 months.
Amy Dixon is a new voice in the financial media space as a rising real estate analyst for her impressive findings in the crashing short-term rental market. In this Wealthion interview, Dixon exposes the get-rich-quick Airbnb scam that led to the utter collapse of the short-term rental market. She reveals the dark truth behind why this once lucrative business was promoted ad nauseum and what it means for its future.
I'm speaking about all short-term rental markets, not just necessarily Airbnb. I just think Airbnb is the biggest brand, so I kind of honed in on that one.
But like Vrbo and some of the other rentals?
Yeah.
Okay.
It's all under the same short-term vacation rental umbrella. So I think what started triggering the alarm bells for me was about a year ago, I just noticed an increase in just people, anecdotally people I know, people on Facebook, people I know in real life, picking up an extra vacation property here or there. And it started to sort of snowball into a scenario where I was starting to see people that have zero background in property management, very little background in real estate. And they're out there suddenly now owning maybe 10 or 12 of these properties. So I was kind of starting to see these two things don't quite line up with reality here. And so I sort of dug into it and started looking more, and I forget who posted the other day, but somebody said, I think over 50% of short-term vacation rentals have been purchased in the last 2 years in the US, which is kind of an alarming number.
Wow. Yeah. So it's sort of like there's a bit of an everybody's doing it now phenomenon going on here.
Yes. And to the point where I think now there's not just a market for short-term rental income. Now there's a market for coaches and, influencers that want to sell how you can own your own little Airbnb empire. And then it started to remind me of an MLM. There's like now this whole other empire around selling the concept that you can get rich buying short-term rental properties, even if you have no experience. And that to me just got kind of scary because I think, you've got people, some of these loans they're not Freddie Fannie loans the way you would buy a home for you to be owner occupied. So I think that there's a lot of leverage in the system and it's all based on cash flow. Mm-hmm. So my concern then was, hey, it looks like we're going to have this post-COVID travel boom. Stock market was at an all-time high. Stimulus payments were hitting. And people wanted to take that vacation. So I think probably a lot of these properties got booked at first. And it seemed really lucrative. And they were telling other people about how lucrative it was. And sort of an unfortunate snowballing effect was you reached a point about midsummer this summer where there's suddenly too many properties in some regions. It's just oversaturated. And you're starting to see a slowdown in demand because the prices have gone up. And I think as the summer wore on, that just continued to deteriorate. And I started to see it in just friends that I know. That's what made me actually go to the Airbnb Superhost group online and find those posts that I put in my tweet.
You were retweeting basically a tweet here from the Airbnb Superhost group. It starts with this one question that one of us asking, which is, what's going on with Airbnb? No bookings at all. And then there's another one under it here that says, has anyone seen a huge decrease in bookings over the last 3 to 4 months? We went from at least 50% occupancy to literally 0% the last 2 months. I'm just curious if this is something only going on in my property or if other people are seeing similar things. I'm in Palm Springs. I want to get into the cash flow part of it, the negative cash flow. Before I do, I just want to make one last point, which is, you were sort of saying that we saw this huge influx of people becoming Airbnb hosts. I think you said something like 50% of the listings have been purchased in the past 2 years, something like that, if I got that stat right.
Yeah, it was a little over. In the US, it might have even been over 60. It was at least over 50. It's pretty high.
So super high. There's another dynamic going on in parallel, which is the baby boomers, as they have been, so for years, people expected that there was going to be kind of a depressing factor on home prices as the baby boomers got to the age where their kids are out of the house, they're now retiring, and they're going to downsize, right? They're going to downsize to a more modest sized residence. And what they've found is a lot of them, yes, they moved and downsized to a smaller residence, but they actually didn't sell their older residence. They, it had been appreciating so much every year that they just sort of held on to it, like assuming it sort of like a stock. I'm just going to keep it in part of my investment portfolio because it goes up by X% every year. And so I just want folks to realize that it's not just the branded Airbnbs and Vrbos that are out there. It's also just sort of a material part of the U.S. housing stock has become rental property that become incremental rental property that sort of folks weren't prepared for. And the reason why all this is important is now we get to the cash flow part, right? So you said, Amy, that a lot of these people are relatively recent buyers. Some percentage of them took out probably irresponsible or near irresponsible type loans if they were getting pulled in as part of these MLM coaching services and whatnot. And so that all works fine as long as the fees are going up and vacancy rates are good. But once people can't afford the fees and the vacancy rates start plummeting like we're seeing now, then all of a sudden this thing becomes an albatross around their neck, right? And a lot of the people who really had to borrow to get in the space, they don't have a lot of cushion to absorb too many months of negative cash flow before they just have to get out, right? If it's your house, you're going to be reluctant to sell and you're going to do everything possible to stay in your house for as long as you can afford to. But if this is an investment property, especially one that you got into with too much leverage, especially pretty recently to try out, hey, is this something I might want to, a way I might be able to make some extra money, you're going to be like on a first in, first out basis. Like, whoa, this thing isn't what I thought it was. I'm getting out of here. Just sell the house.
Yeah, I think that's absolutely true. I think some of the way that some of these loans are structured too, I mean, if they took a personal loan or they leveraged against their own home that they live in, these are not 3% rate loans. Some of these loans could be, 7, 8%. If they're personal loans that are off the books, they cannot be sold through Freddie, Fannie. Some of these loans are going to be floating rate loans. So these interest rate rises are really going to put these people in a pinch.
Just squeezing them,
if they aren't cash flowing and now suddenly they are owing more on their debt, that's going to be a real problem. So I'm also hearing from people saying, yeah, I pulled my vacation rental and I'm trying to now rent it out to a family, like a long-term single family rental. So if they want to take a short-term rental and turn it into a long-term rental, that's totally fine. But what you're going to see then is that's going to start to put downward pressure on
home prices.
Rental prices.
Well, rental prices and home prices, because theoretically.
And home prices.
Yeah, in other words, it's kind of great for renters, right? Excess inventory, all competing for renters. It's going to bring the price of rents down. So long-suffering renters are hopefully going to get a break here. But if you're a homeowner, homes they're basically supposed to be priced on the rents that you could get for that home, right? Or priced on what incomes in that area can afford. It's theoretically supposed to be a discounted cash flow valuation. So rents come down, theoretically home prices should come down too.
Yeah, which is interesting because in Dallas-Fort Worth, I would say right now there is a large gap between like what it would cost to service a mortgage on a home, assuming a 8% or 7% or 8% rate with 20% down, versus renting a similar property. There's already a pretty sizable gap between those two. It is significantly cheaper to rent. So I can't imagine anybody buying right now would be able to cash flow a property. You're going to start to see people trying to bail on them, but you're also going to run into a problem where no one's going to want to buy them because they don't want to live in a hotel neighborhood.
Right.
And they don't want to be the person that's living around 15 Airbnbs on their street.
A bunch of transients, a bunch of, we hear all those horror stories about people who live next door to an Airbnb that's having all these, unsanctioned parties and stuff like that.
Yeah, I think in general, it probably brings down the value of properties in a neighborhood. And certainly I think several HOAs ban them. But there are certain regions where there are zero restrictions. And some of those places have really gone downhill. I've gotten a lot of DMs from people who have said it's turned our market into a complete mess. like 8 months ago. I kind of did a demographic search on a bunch of different local housing markets, and I targeted Phoenix and Boise as two that I thought were very vulnerable to severe housing corrections, and I based it on investor activity. You're already seeing, especially in the Phoenix market, I mean, home prices are collapsing there. Rental inventory is skyrocketing there. And this has only been, I mean, we're still in the early innings of these interest rate rises. The actual number for Dallas County was 43% of homes purchased in 2021 were by investors.
God, it's bananas.
And
41%,
over
huh?
43%. And I think it's 46 in Tarrant County, which is our neighboring Dallas County, is Tarrant County. And that's just two regions of Dallas-Fort Worth. Part of that is why you're seeing now, people have vaguely mentioned this sometimes on social media, like, why are so many homes for sale ones that people bought in the last 2 years? Well, that's why, because an investor bought it and they either flipped it or they rented it out and they took the appreciation money and now they're done. I don't know that we're ever going to have, I hope we don't have this mass amount of short-term rentals like we've had this summer. I really think this was like a one-time post-COVID travel boom demand that is going to be pretty hard to replicate in the future. So I would love it if it was just, some really cool properties. There's always going to be bigger groups that want that vacation house. They don't want to have a little hotel room. I think it'd be great if some regions could put some restrictions on maybe the amount of short-term rentals, or just in some residential neighborhoods, maybe even ban them if local homeowners are having problems. But no, I don't think the Airbnb model just dies completely. But I do think we're probably going to see a slowdown in this whole frenzy of pitching this get rich quick idea by owning a bunch of short-term rental properties.
Click here to watch gold mining investing expert Lawrence Lepard give his recommendation for his top 3 stocks to profit off this recession.